Good morning. Hi, all. This is Dr. Jane Levin, streaming live from Long Island, New York, where the weather is crisp. It's about 34 degrees or so, which is typical winter weather. What are you going to do? What are you going to do about the Dow and the S&P? I'll tell you what to do. Don't panic. The Dow and the S&P are approaching what I believe is a relative low. And I'll show you on the charts where I think these low points exist. It's quite possible, in fact, that we get a turnaround today. If not today, tomorrow. So I'm going to show you what my thinking is. And that, of course, is contingent upon my thesis being correct, that we are not in a bear market, that the wave count is showing a beginning of a third wave up, and this would be the second wave, which is down, and then we have a very strong wave to follow, lifting us to 30,000. So that's the way I see it, and I could be wrong, of course. The Elliott wave gurus are calling for. They're saying that we've just had a flat correction, and now we're in a wave 3 down. And if that's the case, then it's not too good, but I think I'm right. I always think I'm right. I could be wrong, but do your own due diligence. As always, my opinions are strictly my own, and I don't listen to most people because most people are not smarter than me. In fact, they're dumber than me. In fact, they're not right. I'm pretty dumb sometimes myself, so who knows? In any event, let's take a look at the video charts. Don't forget to subscribe. Don't forget that I am going to be doing the ABCs of stock charting and interpreting stock charts. I'm going to begin with the very basics. Let's call it stock charting made easy, beginning with candlesticks and trend lines and going from there, looking at patterns, looking at some of the overbought and oversold indicators. Well, we're going to have a good time. I'm going to keep it simple, because I believe the simpler you get with technical analysis, the better your chances are of being correct. So having said that, let us go to the video charts. Don't forget to share this video, share the link, write some comments. Don't forget to like us or like me. Sometimes I'm likable. This morning, I don't think I'm too likable. I don't know why. Just one of those days. All right, I wanted to catch you before I get to the gym, though, so make sure you can hear what I have to say. Okay, so we're sharing my screen, and now we're going to go directly to the S&P first. All right, the S&P 500, notice I drew a little projected trend line where I think the S&P ought to stop, and notice it's just about there. So it's quite possible that we've seen the lows in the S&P, that this wave 2 down, what I think is a wave 2 down, is actually over. It is, on the other hand, conceivable that we go all the way down to this low, which is 2631, before we turn it around. But I think that an ideal place to turn it around would be just about where we turned it around, the low of the day, 2643. Yeah, I think it's got a potential. Today is a kind of day with a potential to turn this around and even close this gap by Friday. Today, the volatility is key here. It's an extremely volatile market. 800 points yesterday. It's been down 500 points on the Dow today. I don't know what it is now. So the volatility is key. And with moves like that, it's nothing to have a turnaround move of 700 points and finish in the green by as much as 200 points. This is a crazy market. Anything is possible. It's fasten your seat belts. It's every man and woman for him and herself. Let's take a look at the Dow. The picture isn't as clear in the Dow. It looks like it could go down more, but it certainly doesn't have to. I think this gap will be filled. So the low of the day from yesterday was 25,000. I think that will be filled. So I think the Dow is going to make a move up from here of about 500 points. It could go, it has room to decline more. Let's say tomorrow it declines to 24,330. That would be another 200 points. So there's room to decline 200 points, just like there's room to decline on the S&P, but it's more pronounced on the Dow. So on the Dow, you can see the room for it to collapse a little bit more. That would make a total of, wow, 500 now. Another 200 would be 700. 800 from the day before would be 1,500 points in 2 days. That's enough. That's enough. Wave 2 will be over. I don't care. That's it. Monday would be up. I hope. No, seriously, I believe that to be the case. Again, I could be wrong. I've been wrong before, but I think that we get that turnaround. I think we take out the successive highs. I think we take out ultimately the 11.8 high and the all-time high. So one step at a time. Let's get back to the high of 12.3, which was 25,980. I think that could happen in just a matter of a few days, let's say by Wednesday of next week. This is a crazy volatile market. If it can go down 700 points, 800 points in a day, then it could go up 600, 700 points in a day just as easily. I'm not saying it'll be healthy by Wednesday, but I think it'll be in the right direction by early next week. This has been Dr. J coming to you live, streaming live from Long Island, New York. Don't forget, we're going to be doing a class for beginners to intermediate on stock charting. And maybe I'll talk a little bit about Elliott waves because I've been talking about it lately. The problem with Elliott waves is there's always several interpretations of Elliott waves. And after the fact, you can say, yes, this was the right interpretation. While it's unfolding in lifetime, if you take 10 Elliott wave gurus, you'll get 10 interpretations. I guess the same is true using any form of technical analysis. You can interpret charts differently. You can draw trend lines differently. So, I mean, it's not an exact science. It's a little bit of an art as well as a science, the technical analysis. And we're gonna try to give you the basics and let you take it from there. This has been Dr. J at 11 saying, good to see you all. Sorry I was away and I couldn't look at my charts yesterday, but I think I made some salient points yesterday, especially with regard to the Fed, the trade wars, and the inversion curve. So I don't believe we have an inversion. The 3 and 5 is meaningless. 2 and 5 is meaningless. It's not until the 10-year gets involved that I'll start to worry. And even then, if you listen to my commentary from yesterday, you'll see that there may not be anything to worry about, even with an inverted curve between the 2 and the 10. This has been Dr. J at 11, coming to you live, streaming live from Long Island, New York, saying sayonara, shalom, be well, and adios, amigos. Ciao. What I forgot to do is come back to my usual screen, stop sharing. But I'll do it just to give you my wave. I like to wave. Bye.